Fresh report coming from the National Bureau of Statistics shows annual inflation in Nigeria rose for the 9th straight month in May. Country's inflation climbed to 12.4% in May, highest level in more than 2 years, from 12.34 in the prior month of April. This is according to, of course, the Statistics Office. They said the month-on-month increase was recorded in the prices of pharmaceutical products, medical services, transport, and associated services. Also, food inflation, which accounts for the bulk of the basket, climbed to 15.04% in May compared with 15.03% in April. Food inflation, of course, has been in double digits now for more than 3 years running. We're now going to be talking with an analyst from financial derivatives company, Dumebi, Iyeke, who joins me now to discuss these figures. Dumebi, good morning to you. So let's kick things off with how you are taking in these figures from the Bureau of Statistics.
I mean, it was widely expected that we would see an increase in inflation figures for May. The upward trajectory is very much expected. Quite a number of analysts expected that it would be a lot higher due to the economic paralysis from the COVID-19 and supply chain disruptions, the planting season. So these were some of the activities and supply shocks that affected inflation figures for May. And one would think that the relaxing of the lockdown and the reduction in PMS price would help, offset some of this, some of the increase, or offset the rate of increase in the prices in commodity prices. But I mean, we didn't see the impact of that. And this was because consumer disposable income declined significantly in May, as quite a number of salary earners, lost their jobs, and people were not earning as much, so disposable income declined, and so that's just some of the things that affected inflation, and that's how we're really taking it right now.
Excellent. So what about, and I'm glad you've mentioned disposable income, because people have to spend their money on these items. What about the triggers, if we can? Are we going to allocate everything to food inflation? How are you seeing it?
No, apparently this time around, core inflation increased at a faster pace than food inflation. And like you rightly mentioned, it was due to the increase in pharmaceutical products and medical services. So, and, one would expect that would happen due to the current situation in the country with the COVID-19. So there is high demand for medical services, and this has triggered an significant increase in the price of pharmaceutical products. So this time around, core inflation increased more than food inflation, even though food inflation still accounts for approximately 51% of the entire inflation basket. So we can't negate rather the effect of domestic commodities price increase and how this has affected the entire inflation basket.
Right, but I mean, if majority of Nigerians spend, or rather, if majority of what Nigerians spend their money on is food, then I mean that then brings a lot of attention to the 15.04% figure for food inflation. Yeah.
Yes, exactly, and like I said earlier, we can't negate the effect of the increase in commodity prices, and this is largely largely driven by the increase in supply chain disruptions, the planting season, and right now we're even seeing an effect from the exchange rate, from the exchange rate. So we're seeing an effect of that, on imported commodities, because now businesses and companies that that import a lot of their raw materials or materials that they use, and commodities, we're seeing that they're having to spend more, to procure these commodities, and this has definitely affected the price of the domestic price of these commodities, and consumers would definitely bear a larger burden of this change in the exchange rate and how it has affected prices in the domestic market.
Right, and so if we follow that to its logical conclusion then, or what to expect down the line, if there is another devaluation of the currency, which prior one, of course, was precipitated by the drop in oil prices, that then flows through, yeah? So now things get more expensive, all these businesses you've just mentioned. So there's a trickle-down effect. So we can now see these figures going up if that was to happen.
Exactly. I mean, consumers would bear the burden of the increased prices, and this would significantly decline their disposable income and their purchasing power. So what we'd see now is consumers would, try to manage their income well enough to just, purchase what they need at that moment and, focus more on price inelastic commodities like rice, yam, and all of that. So they would focus more on buying staples rather than luxury spendings. And, this would also affect the level of savings. Consumers now, the savings culture would actually or could actually decline significantly because, most of their income and their purchasing power has declined significantly as a result of this.
Great. In fact, I want to get to savings culture and the real rates of return. But before I do, with that focus of consumers focusing on just staples, that now neglects, I guess, businesses in other sectors that they're not spending money on, right? So as far as revenues and profit levels for those businesses, that's how it would work, yeah?
To an extent, yeah. But I mean, the relaxation of the lockdown is, one would expect that these businesses could still thrive. But right now, the focus is still on, consumers and how they can manage this period. Businesses that are, into production of agricultural commodities, we could see them, boost up their activities a little bit because now consumers are diverting, their expenditure, their spending pattern towards these commodities. Other manufactured products, we could still see a boost in the activities, but there would be a significant decline in trading activities. And, just like the GDP figures that were released, there was a significant decline in trading activities, manufacturing as well. So we could still see some of this trend continue. And one would hope that as the COVID-19, COVID-19, comes to an end, pretty soon, so that things could come back to a very, very good pace. And, right now, businesses and even consumers are adapting to the new normal of, focusing their spending and production patterns to what they could actually use for now.
All right. So let's get to, you mentioned savings, yeah? The real rates of return with regards to investments and how the role inflation, this rising inflation is going to play with respect to that.
Yes, definitely. Risk appetite, varies across different levels of consumers and investors. So the environment right now is looking like a very tricky one for the real rate of returns for investors. I mean, when the foreign trade report was released and the capital importation report was released, we saw that foreign portfolio investments were, took a larger chunk of the entire capital importation. And, foreign portfolio investment is hot money, as analysts refer to it. And it's very, very sensitive to changes in the domestic environment. So with everything that is happening now, we could see a decline in foreign portfolio investments because the environment is still, very risky. It's still quite risky for investors to put in their resources.
Thanks. Hey, look, if I'm investing and it's anything less than 12.04%, then I'm not interested. I'm hoping investors are viewing things that way. But what's your outlook? I think final question for you as far as the rest of the year and where inflation could finally could end up. How do you see things?
Definitely, we still expect the upward trend in inflation, but due to the disruptions in the supply chain. The disruptions in, the planting season, which is causing a lot of scarcity of commodities and higher logistics costs. So we still expect the upward trend to continue. However, we hope and we expect that the decline in consumer demand will, slow down the rate of increase in inflation figures for the next months.
All right. Dumebi Iyeke of Financial Derivatives Company Limited, thank you so much for taking us through these inflation figures as well as the impact on spending, disposable income, real rates of return on investments, and the outlook for the year. Very interesting year ahead. Thank you so much for your time.